All right, hello everyone. Today we're going to be going over a much requested video, how I manage my portfolio and how I use risk management to build my wealth. So this is some keys that I've used over the last few years to help myself, a lot of the strategies I've learned. So hope to keep this simple and give you guys a better insight on how to manage risk. As always, if you guys liked, make sure to sub, join the Discord, link is in bio, and like. Okay, so we're going to start off with a couple of things. As me as a trader, I might only win 65% of the time. I'm still able to win overall most of the time because I stick to my key rules. For example, this week, we lost a couple trades, but the other trades went up about 100%. Some went up 70%, some went 60%, and that was all in the Discord. But we're going to go over everything today. Hopefully this gives you guys a better idea and it will help you guys become better traders, long-term investors, swing traders, whatever aspect that is in, that'll help you. So for me, I think that a well-rounded portfolio in general, if you're a swing trader, day trader, this is how I set mine up. So we're going to talk over some different factors. But for me, so Hypergrowth is a stock that grows 100% quarter over quarter in EPS and sales. So if we look at one of some favorite examples here, APPS, this is on the left side. So I'm in APPS at about $15. There's other videos on how to find these, but I'm at $15. Super high growth stock here. We can see it reflected in the price chart. Upstart is another hyper growth stock. I'm in here pretty early as well. We can see this chart, big moves. Afram is another name. So these hyper growth stocks, they're growing really quick. They are a little bit more volatile in the portfolio. So what I do is I try to manage my risk reward. So I put my hyper growth stocks. That's what I keep most of them as. And then I have 30% others blue chips. So for example, when we talk about a blue chip stock, it's usually a stock over history that has a good reputation. It's always growing quarter over quarter. A classic name is Apple. A classic name is Microsoft. Amazon, AMD, all these names that have been around for a long time. And this is why I do it. During a market crash, the first stocks to really take a hit are going to be your growth stocks. They usually take a hit because they have a lot of uncertainty to them. And at a certain degree, their PE ratio is a little bit higher. That's because the growth is inflected in there. So I figure, if it's a market crash, if it's something like that, my blue chips will hold me up if my, hyper growths are leading me down, and then vice versa. During, a normal market where interest rates are low, my hyper growth seems to carry me, and my blue chips are kind of the backbone of my portfolio. So that's just a quick synopsis is kind of what I hold. Obviously, if you're talking about, if you want to manage more risk, or manage your risk even more, if you flip these around, if you did 30% hyper growth and then 50% blue chip stock, that's what I would do. And then for this 20%, this is for my swing trades, my day trades, stuff like that. I also use this for dip buying opportunities because I usually do have cash on hand for some of my other stocks. Again, if you don't like swing or day trading, maybe move this up to blue chips. Maybe do a 50-50 hyper or blue chip. Whatever you decide, the more hyper growth you have, the more volatile, the more risky your portfolio is going to necessarily be, but the more gains. The more blue chips, the more safe your portfolio is going to be and more modest gains. I try not to do 20%. I like to just keep 20%, nothing more in there, and we're going to go over kind of risk reward. So that's how I set up my portfolio. It's done me well. I'm up, about 180% this year off of it. Last year I had a good year, so that's kind of what I do right there. So for risk reward, when we talk about, on my growth stocks, on my blue chip stocks, I really don't worry about them too much. If they dip, I like to buy, I buy the dips. What I do check is on my growth stocks. Every quarter, those earnings are key to see that we're getting exponential growth and sales growth. So I look at that every quarter. But for the most part, I kind of have those in my portfolio. I let those go up and I, use my other 20% to trade with. So the big question here is managing your risk on your swing and day trades. So I have a simple technique that has saved me a lot of times. So depending on the swing or day trade, let's say that, so today, for example, we were trading, we'll say, a couple days ago, we made 70% on DWAC. DWAC, we could see, I don't remember quite where we traded it. It was right here at this bull flag. So we went 43 to 98. So this is a super volatile play. We went $9 to 40. So for me, I want to keep that play small. So here's my goal. I never risk off 5% of my portfolio. So I will never risk off 5% or more. So let's just say that I'm risking off 5%. If I have a $10,000 portfolio and I'm willing to risk off 5%, that is going to give us $500. And this is my general rule of thumb. I will not let that go down 10%. So if we do that, the most we can lose is 50% or 0.5% of our portfolio. So if we use those rules, that would only be, a 0.5% loss. Now, let's say that it was something super risky like I was just talking about. Let's say that I risk off 2% of my portfolio. I risk off 10% of that 2%. The most I'm going to lose is 0.2% of my portfolio. I've had some really good day trades, some swing trades that have been up hundreds of percents. I've also had some that lose. So as long as I keep my losers small using this technique, and then I let my winners run by, scaling some off at the top. That's another topic, but scaling some off at the top, raising up my stop loss, I can tend to see my account continually grow up. In this 5% rule, 2%, you can vary it. Even if you did 10% of your portfolio and you risked off 10%, that's only 1%. It depends on my conviction level and kind of the volatility of the stock. Something that is up 1,000%, I'm probably going to be maybe risking 2 to 3% of my portfolio. If it's a longer swing trade, that I think that I'm going to accumulate for the next couple weeks, maybe that's where I do 10%. But if we keep these numbers small and we minimize our risk, that is how we can how our portfolios grow. Obviously, with the 10% rule, it doesn't have to be necessarily 10%. For example, let's just throw in DWAC for example. Let's just say I'm looking at this chart right here. We have a double bottom at $82. So that's going to be my risk off if I entered right here. So I'm only willing to risk off, less than 10%. I think that's about 9%. So, you can go back to my other videos to look at this key support and resistance levels, but that's how I manage risk. I kind of manage my portfolio. You can throw these numbers around, but I think that risk, of limiting your portfolio, again, is your account going to double in a day? No. You're not going to see, insane gains, but over time, if you keep these small wins up, and not even small, 2%, if you win 100%, that's a big chunk. So that's how I manage my risk. If you guys have any questions, leave those down in the comments. I hope this guy was helpful. I know we had a lot of questions. So that's how I manage my risk, manage my portfolio. Again, I hope it helps you guys. The one thing I would say is as long as you're sticking to a rule, so these are kind of my rules in my portfolio. You have to find your own system, and once you get that down, that'll help you. So if you want to throw some of these numbers around, that's fine. You do what you would like. But as long as you have a plan and you stick to your plan, that's where you're going to succeed. So again, hope you guys enjoyed the video. I will catch you guys live every day on stream. I hope you guys have a good one, and goodbye.